Institutional investors are predictable. When it comes to institutional investors like mutual funds, their buying and selling habits often follow predictable patterns. Let me break it down for you. If a mutual fund starts buying a stock, they usually don't just buy it once, they buy it consistently over a period of time. That's because they're building their position, accumulating shares to create a meaningful stake. On the flip side, when they decide to sell, you'll see the same pattern. They sell consistently, reducing their position bit by bit. Here's how it works. When a fund issues a report about a company, it's often a signal they're going to take action. If they're bullish, they start buying. But when they're ready to exit, they'll slowly unload their shares. Other funds notice this selling activity, and guess what? They tend to follow suit. Why? Because no fund manager wants to be caught holding the bag if the stock price crashes. Their bosses will question them, asking, "Why didn't you sell when everyone else did?" It's like a domino effect. One fund starts selling, and others jump on the bandwagon to protect themselves. That's why you'll often see mutual funds sell off a stock in waves. The same logic applies to buying. When fund managers are researching companies, they'll visit the same management teams and hear the same optimistic stories. If one or two funds start buying a stock and that stock doubles in value, other funds will feel the pressure. Their management will ask, "Why didn't we buy that stock too?" And so, they jump in, driving the price even higher. This is why mutual fund buying often happens in clusters, and why it can push a stock into a strong uptrend. For retail investors, this behavior gives you a clue. If you notice mutual funds consistently buying a stock, it's often a sign they're rebuilding positions and believe in the company's potential. These stocks tend to perform well in the short term because of the buying momentum. On the flip side, if funds are consistently selling, it's often a sign that the stock's best days may be behind it and further declines could be coming. In short, following mutual fund activity is like tracking a herd. When they start building positions, it's a signal of strength. When they start liquidating, it's time to be cautious. Let's watch their moves carefully. This can give you a helpful edge in the market. Want to know how to do well in stock market? Follow us or subscribe to this channel.